It's tax season. It's quite possibly the worst season for most small business owners, but it's even worse if you are not prepared. So we're going to go over some tips on how we can be proactive and prepare for the upcoming tax seasons. I'm going to go over some basic tips for those who are completely new or you have no idea what taxes are or what you need to do. But before you begin, make sure you check with your state to see if you need to pay sales tax on your photography or whatever business that you're doing. The very first step that you need to take is to separate out your personal and business transactions. Nothing between the two should ever mix, so nothing that's personal should ever be on your business account and nothing that should be for your business should be on your personal account. Next, I'm going to give you a very basic definition of what net income is and how that affects your taxes. First, you have your gross income, and this is all the money that you've made. This is your revenue. Then you subtract your expenses, and expenses are everything that you can deduct. So think of your camera gear, your equipment, memory cards, hard drives, props for photo shoots or taking your clients out for coffee, your mileage, things like that. These are all deductible expenses. You can always ask your accountant if you have questions on what can be deducted, but make sure you keep track of all of your expenses in regards to your business. For instance, things like your daily commute aren't deductible, but the mileage to and from your weddings are. Once you've subtracted everything you can write off from what you made, you have your net income. And this is what you'll be taxed on as a sole proprietor or an LLC. The easiest way for you to keep track of all of these expenses is to use a program like QuickBooks and MileIQ. You link your QuickBooks to all of your business accounts and you start categorizing each expense and income as they come in. As for MileIQ, it automatically tracks and logs every time you drive, so you just make sure that you make all of your business drives into its own category. What I like to do is have 4 accounts that I connect to my QuickBooks. I have my basic business account, my salary account, and my tax account. I also have a credit card that's specific for the business, and this is where I put most of my expenses. That way I can track it as soon as the transaction appears. My first bank account is my basic checking account for the business. Think of this as your normal everyday account where your money goes in and out. This is also what I use to pay off my credit card. The money should transfer from one account to another. Second is my tax account. I set aside at least 30% of all of my incoming revenue into this account. Third is my salary account, and this is where I set aside funds to pay myself. It's really important to keep track of your net income on a monthly basis to see how you're doing. Now let's talk about how taxes work for an LLC or a sole proprietor. Like we mentioned earlier, we're getting taxed on our net income, and our net income will be visualized as cookies here. So let's pretend that we made a net income before taxes of $100,000. If you're making that much money, you probably already know how to do this. Right now, we would need to pay our self-employment tax on the entirety of the $100,000. Self-employment tax is 15.3%. Remember when you got a check in the mail and FICA and Social Security took out a chunk on the side? Well, you were only paying about 7-ish% because your employer was paying the other half. And now that you're your own employer, you have to pay the entire thing. Because of some deductions, you're actually taking out 15.3% on 92.35% of your income, not 100%. On our $100,000 that we made, Cookie Monster is going to take $14,000 no matter what. On top of that, you also have to pay your federal and state tax, so he'd be taking close to $40,000 of your income. Now, if you've been responsible, you should technically have the money saved in one of your accounts to pay that amount. But I'm going to go back to the beginning where we talked about our business expenses. If it works for you and your business and you have the means to pay for, say, a new camera, then by all means buy that camera. That $40,000 is money that has to be paid somewhere, somehow. So if you paid in taxes, that's it. It's done. But instead, you can go back and invest into your business and buy some gear or some equipment that'll help you succeed in the long run. Instead of losing that money to taxes, you should use it for your benefits and buy some new gear, a new camera, a new lens, some hard drives. Put it back into your business. Spend it if you can. But let's go back to the scenario where we have netted $100,000, but we're going to see ourselves as an S-Corp rather than an LLC. Being elected as an S-Corp is only for tax purposes for the IRS. You are still an LLC. Where in an LLC or a sole proprietorship, we are the one business owner. But if we elect as an S-Corp, we are now an employee of the company as well as the shareholder of the company. In an S-Corp, your net income is now split into two categories. You have your salary and your dividends. The benefit is that now that you are split, you're only paying self-employment taxes on your actual salary. So let's go back to our $100,000 example. Say $50,000 is your salary with a W-2 and $50,000 is now your dividend. You're only required to pay Social Security tax on $50,000 as opposed to $100,000 like before. You're immediately saving close to $7,000 just by filling out some paperwork, essentially. Another benefit of having a salary with a W-2 is that it's proof of income, which can help when you're wanting to finance something like a house. But because dividends are not taxed self-employment tax when they're pulled, you may be tempted to claim everything as a dividend, but that's illegal. So you have to pay yourself a reasonable salary each year. The IRS has no written standard for that amount, so it's up to you. You just use your best judgment. If you want to elect to change your status to an S-Corp, you have to fill out your form by March 15th to have it valid for the fiscal year, also known as everything you've earned since January 1st. You can go ahead and ask your tax accountant to send you documents and have them walk through any more questions that you have, or you can just go to the website yourself and fill out the form and send it in. Thank you so much for your support for the time being and actually taking the time to watch this video. I'm not an accountant, and everything that I've said was just based off of my experiences as a business owner and trying to find out ways to be as proactive as possible. Even though you might have a really great accountant, it's really important to understand the basics of taxes and finances in order to set yourself up for success in the future. These are just some things that have helped me, so hopefully you are able to gain some knowledge and, most importantly, save some money. Thank you again for watching, and I hope that your business has a super successful year.